Hi everyone, this is Jason Burek of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is a first-time guest. I haven't had him on, but I've been following his work for a number of years. He does a weekly market manipulation wrap-up on the Financial Survival Network with Kerry Lutz. He also writes a lot of columns for the Miles Franklin blog, which is one of the top precious metals dealers in the world. Thank you, and he's also a former top Wall Street analyst. Thank you for joining us, Ranting Andy Hoffman.
Thanks for having me, Jason. It's funny that you say I do a weekly market manipulation wrap-up. That's just what Kerry is, colorfully called the segment, even though we talk about everything. But obviously, my background in this area goes back 12 years when I started writing for free for GATA, and therefore market manipulation has become something of a passion of mine, A, to expose, and B, to educate about.
Yeah, I think that's important because it just seems, going back looking through financial history, it just seems that we're in the wild west here in terms of all the crazy things and schemes that Wall Street and hedge funds and large corporations and politicians and bureaucrats and things like that are basically getting away with at this point.
Yeah, this call's starting at 12 o'clock Eastern Standard Time, which probably as early back as 2005 or 6. I created or coined a term, the 12 o'clock p.m. cap of last resort, which means if they didn't get everything they wanted to do done at the 10 o'clock a.m. key attack time when the physical gold and silver markets close, they typically attack at 12 p.m. Eastern Standard Time. And, take a look what's happened just in the last 5 minutes. There's not a single market moving at all of any kind, and suddenly gold and silver plunge into oblivion straight down. This is what they do. And someone asked me this morning, one of our questions of the week, what has changed? It used to be that there was a managed retreat in gold and silver where they'd let it go up because they had to, but, in a slow fashion. Whereas in the last couple of years, they have just literally gone all out. We're talking about 24/7, 64 Sunday nights in a row, 90% of all trading days at 2:15 a.m., silver has at least a 2% intraday drop on at least half of all trading days. We're talking about all-out attacks on the sector, which is already trading below its cost of production. And the answer, of course, is that as the stakes get larger, as we get closer to the end game of this failed fiat currency regime, the efforts to prolong, to kick the can, have become that much more draconian.
Yes, good points. And in terms of the manipulation, it's high-frequency trading algos, and there's not really that many human beings doing the actual, manipulation or anything like that. Now it's computer programs that are just programmed to sell, and it seems like they're just painting the charts because in the West, there's not a lot of contrarian value investors. Most people in the West don't buy when there's panic in the streets, when there's blood in the streets. They don't accumulate and think, 2, 5, 7 years out of building a good long-term position in investment or something like physical precious metals, which is, insurance or savings or wealth preservation. They're looking to just buy whatever chart is good and, fast money, whatever. It's all about the CNBC fast money crowd and trying to get rich quick. And, there's all these books out, Buy the Fast Money Traders, Buy High and Sell Higher and things like that. And I think that's intentionally done to control sentiment and things like that with the high-frequency trading algos and manipulating the paper price.
Well, let's get this straight, though. Yeah, the computers are what generates the volume, but it's still people that are doing it. It's people that are telling computers to do it. The fact is, in the market, you're talking about the CNBC crowd. I don't think that such a thing exists. CNBC last month hit a 21-year low in its ratings, meaning going back to its opening as a network 23 years ago. So there's no retail left. The retail was destroyed first in 2000 to 2002, and then whatever was left of them in 2008 to 2009. All we've had since is just the money printing going into the hands of the 1%, while the real economy gets worse and worse, and more people on food stamps, and the jobs that do get come out are now minimum wage, part-time jobs, et cetera. So it's really a very few amount of people that benefit, but it's not a matter of algorithms are certainly the tool that are used, but it's no doubt it's the people that are doing it. And what's going on right now is indeed enriching 1% of the population, but it's more rapidly destroying the other 99%, which is why you're seeing social unrest around the world and, frankly, the brink of war in many places.
That's a good point, and there is a global wealth transfer. The hedge fund managers, the investment banks, the large banks on Wall Street, the J.P. Morgans, the Bank of Americas, the Wells Fargos, these guys and people connected to them, and also, Washington, D.C., the politicians, they get to borrow near zero. And the rest of us, we don't get to borrow near zero because we don't have the right political connections. We don't have, millions of dollars in assets under management. We don't have the collateral in order to be able to do these crazy carry trades and all the other stuff that the money managers are doing and, get big bonuses and things like that with this cheap subsidized money that's coming at the expense of savers and taxpayers and things like that. Now, Andy, in terms of, I wanted to start the interview off you talking about your background. You did work on Wall Street. You were one of the top analysts in your field at one point on Wall Street. What woke you up to, not wanting to work on Wall Street as an analyst anymore and cover stocks and write about normal investment topics?
Right. Well, I'm from New York, and, I went the typical New Yorkers route. I went to school for economics and finance, and I got my CFA, and I actually worked as a trader first at Cantor Fitzgerald, and then I moved onto the buy side, and then eventually to the sell side, where I worked in oil field service and equipment for pretty much close to 10 years, the last 6 at Solomon Smith Barney, where, as you say, my group was one of the top ranked on Wall Street for 4 years in a row. But, I left in 2005 in the 4th round of layoffs as Wall Street was finally that was when, after 2000, that was when the world peaked, when the U.S. economy peaked. And all of a sudden, Wall Street wasn't needed anymore for what it used to do, which was to raise capital and allocate it. It all just was starting to become a trading machine. By then, equity research had been soundly discredited by all the scandals, by all the conflict of interest. Heck, I had an office right down the hall from Jack Rubin, who's famous for WorldCom fame, and then being kicked off of Wall Street. So I was very disenchanted by the bankers telling us what to do, by the conflict of interest, and by various scandals at Solomon and other firms. So by the time I left in 2005, I was already 3 years into owning precious metals and even a couple of years into writing for GATA passionately about the markets and about the manipulation. And it just it snowballed over the years. I got more and more intense, more and more passionate and believing in precious metals and disbelieving in the paper markets. And so eventually I started working for mining companies in investor relations, which I did for almost 5 years until I left to come to Miles Franklin. Once I realized that the cartel had destroyed the mining industry and it just wasn't worth it after 2008. After all of the world broke, the financial system broke, it wasn't worth speculating in anything. So now I just hold physical gold and silver, which is not investment, it's savings. And I preach or educate, however you want to call it, for Miles Franklin, which is one of the largest bullion dealers in America. And I'm very happy. I sleep very well with what I hold in my portfolio, gold and silver, and with what I do for a living.
Yeah, are you friends, Andy, with Michael Krieger of Liberty Blitzkrieg? He has a similar background to you. He worked on Wall Street, and he started writing about precious metals, and he was a commodities analyst, I think, for oil and gas too.
Yes.
You may have, your paths may have crossed at one point.
Yeah. Oh, more than cross. Mike is one of my close friends. In fact, we both. It's funny. We both worked as oil and gas analysts. I worked at Solomon. He's about 10 years younger. He worked at Lehman Brothers. And for the same kind of forces drew us out to Colorado. I moved here in 2007 and to the Denver area, and he moved to the Boulder area in, I'm guessing, about 2011. And we become best friends and, simpatico on all of our beliefs about, liberty and precious metals and economics. Of course, his focus now is less on the economic side, and more on the social side. And he's very into Bitcoin, of course. But the two of us are a perfect example of brothers from different mothers.
Yeah, and it's just amazing because I'm friends with him and I've spoken with his story too. And he started writing articles about gold and silver, right? And they started getting posted on Zero Hedge, I believe. And his Wall Street bosses, they started offering him other perks and promotions and stuff if he would just shut up about gold and silver. So it's really funny about Wall Street's views of gold and silver. Like in public, you're not really supposed to be talking about that, but in private, some of these guys, like, they'll admit they've read Currency Wars, or that they will pay attention to some of our research, and in private they may actually be physically accumulating precious metals, but in public, that's not the facade that they'll put on in public. They'll go on CNBC, they'll go on Bloomberg, and they'll promote, their stock funds or their bond funds and say, there's still plenty of value in the market right now, even looking at the valuation metrics and things like that.
Yeah, well, I doubt that even supposedly smartest of Wall Street are accumulating physical gold and silver. I think that they've been so totally brainwashed over the years, over generations, basically since we went off the gold standard 40-something years ago, that the dollar is king. And again, when you're one of the lucky few, remember, most hedge funds have been destroyed. Most hedge funds have underperformed the market for so many years. And I worked at a hedge fund in 96 to 98, and back then I knew it was a scam, charging 20% of profits and 1 or 2% of the fees to try to outperform a market, which is impossible to outperform unless you're super lucky. So most of these people are the ones that are still remaining, that in the hedge bomb industry, as I call it, are lucky enough to have the government supporting them. Every single day, every single second of the day, the government is buying stock futures. We know now that central banks own half the stocks in the world. We just learned that. And even if we didn't learn that, we'd suspect it because we know the PPT by very obvious algorithms that are there every day as they're supporting them. So there's no reason for them to believe in gold and silver. This works for them. And as for the prohibition, what they do behind closed doors, heck, I worked for gold mining companies, where they didn't want me to write Fregato or write personal things because everyone is so scared of the system, including the mining industry executives themselves. They're so scared of what might happen. And it's sad that people don't have courage to face the world, because you want to, not only do you want to succeed in life, but you want to feel that you've made a mark in life. And that's part of what we do here at Miles Franklin. It's just to tell the truth. It's not like we're doing anything illegal. We're simply telling the truth.
Yeah, I would agree about the mining company executives. The conversations I've had with a number of them is, off the record. They won't come on our program really and talk about precious metals being manipulated, but off the record, over a couple of beers, they'll admit it's manipulated, and they'll say, well, I have debt to the banks, and, if I start talking about this in public, the banks are going to threaten to kick me out. They're on my board of directors, and they're going to replace me. And that's just pretty much the attitude throughout the industry is, it is what it is, and things like it's just very unfortunate that they can't come out and speak about it. But maybe, with more of these royalty and streaming companies doing the financings for miners instead of the banks with the debt, maybe that will change, because then they won't have to take the as much debt from the banks, and then they could get their financing from other people, and they could be more honest about things. But until that changes, the mining company executives, and in order to build a mine, if they don't take on that debt, it's just it's not a situation here where they feel comfortable coming out and speaking about it.
And let's not kid ourselves here. Most mining executives are in the wrong business because the business has been so capital starved by 15 years of suppression. We're talking about 15 years of them producing sometimes at very meager profits, sometimes, as in the last few years, of extreme manipulation at below the cost of production, to the point where there is no exploration business left. There's no more financing. And even American Barrick, or Barrick Gold, almost went bankrupt last year, and still may go bankrupt if things don't keep going, don't get any better in the pricing areas. So you're talking about they've been so undercapitalized for so long that they have not been able to afford talented management personnel. Pretty much any mining company, aside from the biggest of the big, is going to have either geologists or engineers running the company when they need finance people running the company. Heck, I was in investor relations for many years. I was one of those smart financial people. But right now, there's no one left all those people that did what I do have all been laid off because there's no more money. So again, you have people that have absolutely no savvy at all in the economics of their own business being forced to run the business, and of course, being forced to run the business while they're actually operating the business, which is why the mining production, gold mining production, peaked over a dozen years ago and has nowhere to go but down. I've spoken of it for a long time. I believe that gold and silver production not only will never return to the high levels that they were once at, but that they're going to precipitously drop. And I do mean precipitously. I wouldn't be surprised if gold and silver production fall 20 to 25% in the next 3 or 4 years alone. And when prices do eventually surge, that the governments are going to nationalize all the mines, so that'll really cut down production. So I think both metals are going to get more and more scarce as time goes on for a variety of reasons. And the biggest reason, of course, is the gold cartel, which in the long term has kind of shot itself in the foot by destroying the mining industry.
Yeah, and it seems like the manipulation actually increased in 2011. It seemed like the people, the bullion banks, the people who are involved in this precious metals management scheme or manipulation scheme or whatever you want to call it, price suppression scheme, controlling, capping the prices, it just seems that in 2011 they were losing control. Silver was around 50, gold was at 1900. The debt ceiling, there were all those debt ceiling arguments in 2011. I remember September 2011. The gold price was starting to violently move. There were the problems in Europe. And then all of a sudden, they started changing the rules with margin requirements, and they started the banks, the investment banks like Goldman Sachs and I think the French bank, my mind's escaping me which French bank always comes out with negative gold reports. The research reports just started coming out in mass about gold that, gold's extremely overvalued. It should only be $1,000 or less. And, it just seemed to be coming out en masse with new schemes and new ways to completely turn the tide, paint the charts, try to change sentiment in that regard. And then, we've looked at the market since then, and physical demand, from a global standpoint, it hasn't really dropped. I believe for physical silver, I think since 2007, the amount of physical silver purchases is up 5-fold, and the physical silver price is, cut in half. So, and industrial demand, I don't think for physical silver has dropped. And, you see you mentioned the miners and they're not making that much money. It seems to me the miners really can't make any money at these prices. There's no incentive whatsoever for them to invest in new mines or exploration development. They've slashed costs to the bone. I look at the balance sheets of miners still, and I don't really see any more costs. Maybe some of the larger ones like Barrick can cut some more SG&A, selling general and administrative expenses, but I don't see any more costs a lot of these producing miners can cut without starting to shut down most of their mines.
Okay, well, let's go back to the first point you made, 2011. Okay, and again, from what I said in the beginning of this call, someone asked me, what has changed from the managed retreat to the all-out attacks that we've seen in recent years? And, again, I've been in this sector 100% since May of 2002. So I've seen the progression, and people like Bill Murphy have been back there since 1998 and 1999. But suffice to say, I've undergone the misery of attacks every second of every day since May 2002. It wasn't just as bad then, but it was plenty bad. But clearly, 2011 was what I wrote an article this year called The Point of No Return. And in it, I kind of, you talk about the debt ceiling issues back then. I compared the debt ceiling, what the debt was then to what it is today, what global GDP was then to today, money supply, you name it back then. The issue is, of course, everything is far worse now, but back then they were losing control. They first lost control in April of 2011, which is when they did what I call the Sunday night paper silver massacre, when they absolutely took silver down $6 in the matter of minutes on a Sunday night with China closed for a holiday. And then they bring out the old bin Laden killed thing to try to make that seem like it's the reason why. People forget, by the way, that after the bin Laden announcement, hours later, gold had recovered all of its losses so then they came and attacked it again. But the real issue, of course, was when you got to 2011, when not only silver was hitting an all-time high, but gold was hitting an all-time high too. And if you remember, and it's no coincidence, by the way, that we had a massive attack on the Monday of Labor Day just last week, because there was the same exact thing. Gold actually hit its all-time high on Labor Day, September 6, 2011. It was actually actively trading in the thinly traded platforms on Labor Day because people were so scared of what's going on in the world. It reached $1,920 an ounce, and that's when they hit the point of no return. The powers that be knew full well that very night the Swiss National Bank was going to devalue the franc by 7%, the last remaining solid currency, and peg it to the euro. And within an hour of that incredibly precious metal bullish event, that's when they started what was called Operation PM Annihilation 1, when they started viciously attacking gold. And they did it all through the winter of 2011, too. There was a second attack in December of 2011, which I call Operation PM Annihilation 2, and that occurred literally an hour after the ECB had an unexpected rate cut. And that's when, if you remember, they even put out a fake headline. I say fake because it's never been refuted or validated, that the central banks were selling gold. It said the Fed, the Bank of England, and the BIS were selling gold to cap the price when it surged. Of course, we have never seen the Fed or the Bank of England ever report that they've reduced their gold holdings. So either they were lying, or, as we've said all along, they sell their gold and they just don't tell us. They double count it. But anyway, since that time, that's when things really went into fifth gear with the attacks on gold and silver, because they knew that things were getting so bad. Then we had that crisis. Then we had a year later the European crisis where Draghi was forced to bail out Spain and say he's going to do whatever it takes. And still the price of gold, as we got into early 2013, after the fiscal cliff crisis and all that, was still over $1,700, and gold and silver was still over $30, and they were still terrified. And if you remember, that was when Bitcoin was starting to explode too, because people were fearful of alternative currencies. So then, realizing that even the past 2 years hadn't done the job of quelling gold and silver, we had the infamous meeting on April 11th or April 10th of 2013, when Obama had a, quote, closed-door meeting with the 10 or 12 largest too-big-to-fail bank CEOs. That very same day, Goldman Sachs coincidentally put out an aggressive short sale recommendation on gold. What a coincidence that day. And what happened? The very next day, that Friday and the following Monday, gold was hit for $250 an ounce and silver for $4 or $5 an ounce. And since that time, since that day, since that meeting and that attack, and by the way, Bitcoin was smashed by like 70% that day too. Since that time, we have now seen the most violent, vicious brick wall of gold cartel attacks in history. I do the numbers myself. I wrote something called Sunday Night Sentiment 4 or 5 years ago, saying the cartel likes to either smash or cap gold movements on a lot of Sunday nights. Well, they've now done it 64 Sundays in a row. And as for 2:15 a.m., which is the open of the paper pre-market session in London, I do the math every single day. 90% of all trading sessions in the last 300 trading sessions, they've attacked it, and so on and so forth. The silver attacks I was talking about earlier. We're talking about a heightened desperation as the physical demand, as you say, is at record levels, and the world is at a record low level of economy. You're talking about, what's going on with demand. Yes, industrial demand, pick silver. Industrial demand for silver has barely changed, and it rarely ever changes. It's about 3/4 of all the production year in and year out. And it's not going to change because it's very, very indispensable stuff in very small amounts. But what really moves silver is the investment demand. And last year, despite the 30% drop in silver, we had a record year for sales at the U.S. Mint of Silver Eagles. This year, the pace is ahead of last year's sales. And by the way, last year, India had its all-time highest in silver demand despite all the tariffs that were put on them. Gold last year was an all-time high in China for demand, and an all-time high on a worldwide basis. This year, though, it's almost impossible to measure because, as we know, just a few months back, China opened up its free trade zone in Shanghai. So now we can't just look at Hong Kong imports anymore. There's a whole bunch of gold that's going into Shanghai and Beijing that we don't know about. So you can't even say, well, the numbers, the MSM will say, well, gold demand is down this year. No, it's not. We have no idea what the demand is going into China. We know the refineries in Switzerland are still running full out. So my guess is that gold demand is not a heck of a lot different from last year's record levels. My guess is that when all is said and done, silver demand will be right around last year's record levels. And yet, look at what we just talked about now. These guys will not let the Dow go down, or as I call it, the Dow Jones Propaganda Average, and they will not let gold and silver go up. That is, until it just does, because all fiat currency Ponzi schemes fail, and all attempts to hold gold and silver down fail.
It's good analysis there, Andy. And to add to your points there about China, the Shanghai Gold Exchange, their silver inventories, I think, according to Kuz Jansen, who's a top precious metal analyst as well, I think they're down more than 90% in the last 12 months. So a lot of Chinese are now switching to buying physical silver because they realize it hasn't risen as much as gold hasn't in the rally, since 2014 started. And then in terms of physical gold demand in China, we have what Jim Rickard said in his book, The Death of Money. He's talked about how the Chinese military is secretly arranging agreements to get humongous shipments of gold brought into the country in different ways, besides through Hong Kong or besides through the normal ways that gold is normally brought into China. So there's just no way to account for any of this. Like, we have Kuz Jansen's numbers of the Shanghai Gold Exchange and the gold withdrawals there, which are, I think, fairly accurate given all the analysis he does, but it's probably an underestimation of the real amount of physical gold that China is importing. It could be double. I know I've seen Alistair McLeod's numbers, and he thinks it's double the amount that Kuz Jansen has done according to his Shanghai Gold Exchange numbers, and yet the paper price, continues to fall. So what I've garnered from all this, Andy, and you've provided our listeners with a lot of great stats to back all of this up, is that none of this is sustainable in the long run. So I don't know in the short term how much longer this is sustainable for, but I can tell you in the long run that none of this is sustainable.
Well, to go back to your Shanghai exchange numbers, now, people don't realize, they think, well, the COMEX, it's the big exchange and everything. COMEX, almost no metal ever gets delivered. Even forgetting the lies about all the data they give, which is, there's no way that anyone should believe anything that comes out. In fact, last year in June, the CME put out a disclaimer on its data that says, we can't validate that any of this data is true. And on top of that, literally just 2 months ago, JP Morgan was fined for repeatedly submitting false data, okay? So why anyone would believe any of that data, much less the fact that it doesn't make sense. Do you realize we were talking about at the end of last year, there was almost no gold inventory left, and there's still almost no gold inventory left. And yet, month after month, the numbers come out, the open interest, and, you have the numbers standing for delivery. Harvey Organ puts them out. We're talking about hundreds of thousands of ounces of gold. There were many, many months earlier this year where there was more gold standing for delivery than there was in registered inventory. And yet the CME has literally not shown a single ounce delivered out of their inventory all year, despite the fact that there are hundreds of thousands standing for delivery. Right now in silver, there's supposedly 60 million ounces. It's like, barely over $1 billion. There's 10,000 entities on the earth that could take it. And yet there's 16 million ounces of it standing for delivery, but it'll never get delivered. It never seems to leave. It's all lies, and why anyone looks at it, I have no idea. And even if they assuming that it was true, it's such a small amount of metal, it's unbelievable. And as for Shanghai is the real place where the deliveries occur. There's far more deliveries that occur in Shanghai than COMEX or even in London. And people don't realize that. They think because it's some small exchange, compared to what people think of the COMEX, that there's no metal delivery. That's all they do there is delivery. And what you're talking about, the numbers are astounding. In April 2013, just before the attacks that I mentioned, which, by the way, I've called the alternative currencies destruction, there were 1,100 tons of silver in inventory in Shanghai. That was the peak. Now there are 95 tons of silver. 95 tons is worth a measly $60 million. That's it. So if there were 10,000 entities that could take out the billion, there's probably 10 million entities that could take out the $60 million worth. Heck, I know people who could take out that kind of amount. So the point is, there's so little inventory out there, which is why it's so remarkable that they've been able to keep the paper price from exploding. Now remember, And again, silver is the real Achilles heel because there's so much less of it. And that's why we saw major industry shortages in 2008, 2011, 2013, and why I believe that the next one could be the final one, where there will be no paper games that will save it. So again, there's so little out there. And again, we just were talking about record silver demand last year in the world, and probably not much different this year. And industrial demand doesn't change much, and production has been falling like a stone. So yes, something is going to give, and it's going to give in a big way, like no one could possibly imagine. My guess, sooner than later, but I don't make predictions. We're not financial advisors at Miles Franklin. We're bullion dealers, and we're just telling people the truth. And the truth, from my analytical experience of 25 years, tells me that there cannot possibly be enough physical metal out there to keep this game going much longer.
Yeah, I mean, it's the physical metal. If you look at, I saw an article from Sprott a couple months ago, and it said that the U.S. is exporting a lot of physical gold, and it's a lot more physical gold than U.S. gold miners are mining. And I think Steve Sanangelo of SRS Rocket Report had similar numbers too in an article. So obviously the gold is being taken from either GLD or the Fed has what little gold's left, or maybe they're stealing allocated gold from other countries and they're sending it there on their behalf to keep the precious metals paper price suppressed and managed and things like that. But it just seems the gold's coming from somewhere, like whether it's the New York Fed and they're selling other countries' gold and they don't have permission to do so, or maybe other countries are giving them permission. Who knows what's really going on behind closed doors, and these central banks. There's just so much lack of transparency right now with the currency swaps and things that, once in a while we get a PR announcing, a bilateral trade agreement with a currency swap line, or we get, the Ron Paul audit, the one-time audit of the Federal Reserve where they printed $16 trillion during the crisis and gave it out to foreign central banks and corporations and things like that. Once in a while we do get the truth, but in general we're not being given the truth at all.
Right. Well, look, it all goes down, again, I cut my teeth in this world with GATA. I became a member of GATA in 2002. I started writing for them in probably 2004 or so. And, and that's how I became enamored with this segment. So I would guess that based on all the work I've done, I might know more than all but, I don't know, 4 or 5 people on the planet about this topic. I've read about everything. I'm not the greatest derivatives expert like Rob Kirby. There are some things that I don't make the communications with central banks like Chris Powell does. But as far as being aware of all the evidence that's out there, there's very few that have done as much work as me. And, from GATA, they went from the beginning, way back in the late 90s, a guy named Frank Venerosa did the first such studies where he did the math that showed that it doesn't make sense what the central banks have. Clearly, they are leasing it or swapping it or otherwise selling it without telling you. And remember, the IMF, which somehow makes the gold accounting rules, I'm not sure why, allows central banks to double count leased gold. They could lease it and say that they still own it. So we know that that it's a fact that they are allowed to do this. The real question is how much have they done? And and Frank Venerosa did those early studies, and Eric Sprott's work that you were talking about a few months back is the same kind of study. I mean, the footprints are everywhere. Their footprints. You have admissions. The famous one is this Bank of England governor named Eddie George back in 1999, right after the Washington Agreement. He gives this thing. He says, we were in the abyss. After the Washington Agreement, there was such enormous demand that all the banks that were shorted were going to go bankrupt. And so the Fed and the Bank of England, we got together and quashed the price. We had to. So, you have stuff like admissions, and then you have stuff like the Bank of Portugal putting in their statements 5 or 7 years ago that they had leased out all their gold. I mean, it's right there for you to see.
Greenspan talked about leasing too, right?
Yeah, absolutely. And then you talk about Sprott looking at the U.S.'s own documents about exporting gold and going, well, how can we export this gold if it's more than we produce unless it's coming from official sources? The only official source, of course, is Fort Knox, and they won't let it be audited, and they refuse to say that there's any less gold than there was 30 years ago. And then when the Germans say they want their gold back, not only do they not get it, they're not even allowed to see it. So the point is, look, that gold is long gone. How much is left? Who knows? Would they be willing to sell it all to kick the can an extra mile? Probably. Have they done it already? Maybe. I don't know. But where it's coming from is the official numbers. That's where the gold has come from because, as you say, the mining production has been going down for the past decade. And the gold, and I mean, you think about where gold demand was in 2002 or so when mine production peaked, and you think of where gold demand is today, it's probably, I don't even know the numbers, it's probably 5 or 10 times more, and you realize that gold has been coming from Fort Knox, from the Bank of England, whatever's left there, et cetera. And so, this game of trying to satiate insatiable Chinese demand with gold that, is on fumes can only last for so long. And of course, it's not just China. It's pretty much the entire Eastern world, and pretty soon it'll be everyone in the world who's trying to get their hands on the little gold and silver that's there.
Well, actually, in the last decade, Andy, you're correct that gold production has been flat and is declining because of the grades and problems with finding large gold mines. But silver production over the last 15 years or so has actually increased because there's been a lot of increase in copper production too, and silver's a byproduct. But other than that, I agree with you on many of your points. Now,
let me go further on that again. The amount that silver has increased in production has not been that much. It's not a world-changing amount. If it's up 100 million ounces, that doesn't change the world much. And as you say, it's 2/3 of silver is a byproduct. Now, the primary silver miners, which are still a third, have been in dramatic decline. In fact, U.S. and Canadian silver production, which is the most important for the U.S. government if they want to mint silver eagles, is down something like 70% from its highs a decade ago. And as for the rest of the world, it's not going to keep going up from here. And more importantly, have you seen what's going on with base metal prices? The costs of mining have gone up exponentially. The economy is falling apart. Heck, copper is down, I think, 10 cents today. So the outlook for mining for base metals is no better than the outlook for mining for silver. So I would expect that to fall dramatically in the future.
I agree. Yeah, I agree, and there's no incentive whatsoever to invest in a lot of increase in silver mining production at this stage. And for most silver miners, even the really great ones, the large ones like Pan American Silver and First Majestic Silver, some of the largest primary silver producers in North America, they're struggling right now. So they may have a mine or two that's profitable, but they're running a couple other mines that are not profitable, and they have debt on their balance sheet, or at least Pan American Silver does, and they're trying to figure out what to do with the debt and things like that, and how much longer they can keep the mine running before care and maintenance. Now, in terms, Andy, of your macroeconomic view, do you think then that the global central banks are going to be able to keep this game going for a number of years? And do you think, what's your view on the inflation-deflation debate?
Well, let's answer the first question first. Do I think it will go on for years? Not a chance in hell. They are so. I mean, look at what's going on. Let's pick Japan right now. Japan is in terminal decline. I wrote about their demographic hell a long time ago. Their population's 10 years older than the rest of the world. They don't even have any workers to save the country, even if they had the ability to do so, if they had the funds to do so. This country is as broke can be, and getting more broke every day. And, now that Abenomics is that, basically their eternal QE has been proven to be as massive of a failure as possible. They're at 250% debt to GDP. Their CPI is at its highest level in decades. Their real wages have been falling for years and years right now. I mean, we're talking about their next step when Abenomics ends, which is only in April, it's coming up, is to hyperinflate. They're going to do it again. And so, can they do that again without Japan falling into the sea? I doubt it. And then you look at Europe, which, this was the most ill-fated union of all time. You got the 23 countries that all hate each other, different languages, currencies, economics, and they put them together right at the height of the illusion of economic bliss at the turn of the century, and it's been an utter disaster from minute one. Most of the countries didn't even meet the ECB financial requirements, and right now even Germany's not meeting them. So I think as the economy of Europe gets worse and worse and worse, you're going to see more secessions, like we may see with Scotland in the next 2 weeks coming out of England, and it won't be just secessions; it's going to be expulsions, like Greece and possibly even France. It's that bad out there. So no, when Draghi does whatever it takes. And by the way, it's ironic that he says he's scared of deflation. he hasn't even started QE. He just announced it last week, and the euro has fallen so precipitously that he's probably going to get his inflation before they even start the QE. The fact is, Europe doesn't have a chance in hell of surviving with the euro currency, and certainly they're not going to be able to keep this game going for years. And of course, then as far as the United States, because we have the reserve currency, we have the ability to kick the can a little longer than most. But I mean, who are we kidding here? Our debt is going up exponentially also. Our standing in the world is plummeting. And of course, the actions that we're taking geopolitically almost makes it seem like we've given up already. And we're looking to start a war to find a way to keep the current people in charge, because, the United States economy, in my view, has not been this bad since, aside from a few weeks post 9/11 and a few weeks in the deer in headlights, part of the 2008 crisis, I don't think it's ever been worse since the Depression.
Yeah, I would agree with a lot of what you just said. It seems like almost every country on the planet is in one degree or another of worsening stagflation in their real economy. So their food prices and energy prices are going up, except for the U.S. here, because the U.S. has shale oil compared to the rest of the world, so the U.S. has cheap energy. But other than that, you mentioned Japan. Japan's food and energy prices have gone through the roof. Their consumer prices are starting to go like crazy. Their wage growth and job growth is just not really there. They have a lot of technology that are potentially going to replace workers. They've invested a lot of money in government bonds that are not good long-term investments. Instead of spending as much money on small business or research and development and things like that. And there's just been trillions of dollars in misallocated capital all over the globe, whether it's China or Japan or the United States. And Europe is fighting deflation, but Keynesians are always fighting deflation. Even if there's inflation across the board, the Keynesians and the politicians are going to come up with new formulas and statistics to not talk about the inflation that they have and say that they're fighting deflation. I have listeners to my podcast, Andy. I don't know about your podcast, but I've listened and your blog and the articles you write. But we have listeners in Europe who tell us their bills are going up 6-8% per year for all the necessities in life, and yet Europe is supposedly stuck in this horrible deflation.
Yes.
So
that was the second part of your question. Where do I stand on that? And obviously, I've spent many pages writing about it, many words talking about. Look, I mean, yes, we all know the difference between the real definition of inflation simply has to do with how much money is being printed, as opposed to price inflation, which is the symptom. And then some people say, well, yeah, you can print all you want, but if velocity of money is down, then it won't increase it. But the problem is, the money does go somewhere. Right now, it's gone a lot into financial markets, causing these inflated prices, which only the 1% get to enjoy. But generally speaking, when we talk about deflation, it's a joke. I mean, Japan has been talking about deflation for years. They're talking about deflation of their asset markets. They may have brainwashed everyone to believe it's prices in general, but no, it's not. Tokyo has been the most expensive city to live in the world. I think 13 of the last 15 years. And I think Osaka is right behind it. It has among the highest cost of living in the world, and part of it is because they have to import a lot of things like energy and food that they don't have. But irrespective, there's no deflation at all in the cost of living in Japan, that's for sure. The only deflation was the real estate and equity markets that crashed in 1989 and have never recovered and never will, because their demographics, let alone their financial situation and their reduced manufacturing market share, would never allow it. As for Europe, you look at a chart of their CPI, there's not even the slightest blip downward at any point in Europe's history. So again, to talk about inflation, because the rate of change of a manipulated CPI index is not as high as it was in the past, doesn't mean they have deflation. It just means it's central banking propaganda that's used to justify the need for QE, which feeds on itself, because when everyone front runs the QE by buying treasury bonds and sovereign bonds, the MSM will write, well, look, there is deflation because, look, interest rates are going down. No, interest rates are going down because of all the QE and all of the money managers that are front running that QE. It's that simple. It's the burn.
And the interest rate swaps, too, just to keep the game going.
Absolutely. Yeah. And when we talk about the United States, I mean, cheap energy, we have shale oil. We're still an importer of oil. And by the way, that shale oil, I was an oil analyst for 10 years, is starting to deplete massively, and it probably has peaked already. And still we're an importer of oil. And still, I don't know. I look at my gas station where I'm paying $3.50 a gallon of gas. Doesn't seem too cheap to me. It's pretty close to the highest level it's ever been, which is about $4. And at $3.50 a gallon, it makes a significant impact on the average person's life. As for the rest of America, even with our reserve currency that allows us to have less inflation than other people, we're talking about an all-time high cost of living. I mean, John Williams Chattel-Stats does the real math of inflation. It's been about 8 or 10% a year for as long as the eye can see, which is exactly what I see in my daily life. It's that simple. There's no deflation anywhere, and the only time they ever talk about, quote, deflation is when markets aren't going up that they want to go up. That's that simple. In a fiat Ponzi scheme, it's impossible to have monetary deflation, and the point is, because velocity keeps going down because the economy is so bad, all they're going to do is make up for it by printing more until eventually there is going to be a scare when they lose control of the gold market or some sovereign bond market or a black swan event like one of the millions that are out there, like I don't know, Ukraine or Scotland or any of these things, breaks up the control that they try to have. I mean, it's going to happen. It's just a matter of when.
Yeah, the only evidence, Andy, I see of falling prices, and this is not an Austrian school free market definition of deflation, is consumer discretionary item, and that's because the consumer here in the U.S. and probably also in Japan and in Europe, they don't have discretionary income to afford discretionary items because the price of food, energy, rent, utilities, healthcare, all of those things are going up like crazy. So, the everyday items that people need to survive, those prices are all inflating like crazy, or they've been inflating like crazy for a very long time and underreported, and people don't have the wage growth and income growth. They're getting taxed too much. They can't keep a full-time job because the economy's, at least here in the U.S., is not creating a lot of full-time jobs anymore outside of shale oil jobs or Silicon Valley jobs, or if you're lucky enough to go get a job at a large corporation. And the real economy, is not growing jobs, and yet, we're being stuck with stagflation here because that's the definition of stagflation, where you have more money chasing the same or fewer goods or services, and wages are stagnant or jobs are being lost.
Yeah. I mean, that's what's so comical about this whole, recovery meme. They just keep repeating. And again, it all started last April when they smashed gold and they started their whole tapering thing. Try to say taper, like, I mean, if we print less money than we're printing, that somehow that's bad for gold, or somehow that means we're recovering. And here we are at the end of the taper, and the economy is as bad as it's ever been. The labor participation rate, as bad as it's ever been. The job mix, as bad as it's ever been. Entitlements, as high as they've ever been. Debt, personal debt, government debt, even corporate debt, as high as it's ever been. With retail, you were talking about. How could anyone talk about retail, talk about a recovery when we started out the year with the worst holiday spending season since the bottom of the 2008-2009 crisis, and it hasn't gotten the slightest bit better. Retail sales have not improved the slightest bit since, and anything they have improved has probably been due to inflation. So again, companies are closing doors, they're laying people off left and right, and we're told that there's a recovery. No one is spending on anything except the high-end 1% stuff. This housing recovery we had, which is already deflating, was only in the high end of the market. And the only retail stores that were doing well were, the Porsches and the Maseratis and the Tiffany's, where people that get the free money from the government spending. Everything else has been down. And, you're talking about the job mix, what jobs are left. Well, even the shale boom is dying. I mean, you look at the shale companies, because the economics of shale are so bad. And by the way, with oil plummeting right here, they're going to be a heck of a lot worse right now. It's no different than all the other saviors that I saw of the oil business in my 10 years there. Right now the shale business is in a huge amount of debt and depletion rates. So there's no boom in jobs coming in that aspect. And as for Silicon Valley, I think most of their jobs they outsource. That's the whole thing with Apple. They're debating whether they should call all the workers that Apple hires in China manufacturing employees in this country. They're not. They're not jobs in this country. The only real jobs that are here, a third of all the jobs in this country are now temp and part-time, minimum wage, etc. We've given away all the business that wasn't taken away.
Those are good points, and I agree with what you said there. You provided a lot of example for my stagflation thesis, and I think you agree with that. That well, at least the attempt through financial repression, through the wealth effect, through currency swaps, is to try to keep this extend and pretend game going of that there is no inflation, but keep like a worsening controlled stagflation going to prevent free market forces and 2008 or worse type deflationary event or hyperinflation. And I think, eventually they're going to lose control of this stagflationary event because, they keep changing the rules and doing all these other things, and it's going to keep waking people up when they can't get a full-time job and they can barely pay their bills.
Absolutely. I mean, you couldn't say it better. It is, as I say, I've written the same thing every day, especially when you got to that 2011 point of no return. The only tools they realized they had left were money printing, market manipulation, and propaganda, and they've taken every one to the nth level. From the way that I've seen and have written about it lately, I think I call it the evil tripod. I think the propaganda leg of that tripod is broken. No one believes anymore there's a recovery. I don't think anywhere in the world there's anyone that truly believes there's a recovery other than the brainwashed money managers who see the market go up every day, so it's in their best interest to say, yeah, there's a recovery. That's why stocks
they're getting big bonuses.
Yeah,
exactly. Andy. I did a podcast about this a couple days ago, and I talked the whole society throughout all levels, politicians, consumer, the society that's been centrally planned, all the incentives that have been put in place are all screwed up and perverse.
And that's why you have record low approval ratings for everyone. We're in this great recovery here. Record low approval rating for both the Congress and the President. Record low approval rating for Shinzo Abe, for Francois Hollande in France, probably for Merkel in Germany. Who knows across the world? If people don't think you're doing a good job, obviously they don't believe that the economy is recovering because, as they said way back in the Clinton administration, it's the economy, stupid. Although I wrote a piece last year called "It's not the economy, stupid," meaning people don't vote for politicians anymore because things are bad. They simply vote for whoever's going to give them the most entitlements.
Yeah, it's a great point. It's turned into a bribe system, just like de Tocqueville predicted, and I think there was one more Frenchman who came to the United States and predicted that the path that the United States government was heading on, that the politicians were just going to bribe the citizenry with their own money, and it was going to turn and eventually ruin the economy and potentially the government and things like that in the long run. Now, in wrapping things up here, Andy, please tell our listeners where they can find your work.
Right. Again, I'm Miles Franklin. We've been in business 25 years, one of the largest bullion dealers in America. You can call us at 800-822-8080. We put out a free blog 5 days a week, myself, Bill Holter, David Scheckman. You can get it at milesfranklin.com, and you can actually get it emailed to you if you'd like. Otherwise, it's up on the website. And you can always email me at ahoffman@milesfranklin.com.
Well, thanks again for your time, Andy, and hopefully we can have you back on again soon.
I look forward to it.